Hey, how's it going, Forever and Profit students, Forever Blue students? In this video, I'm going to be running down Euro Pound daily. Basically, I'm here on August 2013, so you can go back in your chart, Euro Pound on the daily chart. So we're going to start off by basically marking up the charts. I'm going to show you everything I would see in the market. Okay, I'm going to give you a little sneak peek of harmonics. Basically everything like Fibonacci, trend lines, market analysis, market structure break, entries, exits. I'm going to basically be showing you the whole shebang, ABCD patterns, the whole thing, basically all in one smooth flowing market. Okay, so Euro Pound on the daily chart is pretty smooth. If you go back to this date, you're going to see a lot of confluences. This is a perfect pair, I think, would be for basically this section of the market on the Euro Pound is perfect for back testing. Just because it has so much beautiful movements, and you'll see right now what I mean. Okay, so starting off Euro Pound daily, August 2013, we have this low right here coming in at the 77500. Obviously a quarter point, which is not a surprise. It bounced off right here, but I'm not going to be adding in the quarter points in this video. I'm going to be adding them in to the next video, and then that's going to give us even more confirmation. Just to show you basically like. I figured out something with the quarter points that is pretty much going to make your trading a lot easier. Okay, it's a lot of less stress. Okay, especially when you're trading on the 4-hour chart, daily chart. Okay, so let's start off our markup with a simple trend line, low to this higher low, 1, 2, run it through. Okay, so as soon as we see this trend line break, okay, so as you notice, we're in an uptrend. Let me fix it a little bit. Okay, as you notice, we're in an uptrend. As soon as that is a heavy trend line, guys. This is a daily chart, so this is a heavy trend line, very powerful. As soon as that breaks, we're going to start looking to go the other side. Very simple. I mean, look, it broke through. All right, we see those retests. And then we just start making lower lows. So now we're expecting more downside. Okay, so let's see what actually happened with this break. Okay, we have this right here where it's breaking. Let's try to measure what's going on from this relative high to this relative high. Let's see what's going on there. All right, see if we can get some Fibonacci in there. All right, so I'm going to measure from this high to this low, right? Because this is kind of like a double top if you think about it. If you look at it, a high came back down, came back up, failed to break the high, 88.6 retracement, beautiful, and then we get the trend line break. Looks like we are starting a downtrend, right? Let's actually put in some market structure, raw market price movement. This is something you need to do. If you're going to understand the market movement, this is what you have to do, okay? Overall price swings, right? That's what we're going to be looking at. Boom. Back up to the 886. And then we finally get a break down. Okay, right here, retracement, break down, pull back, and keep going. Okay, but okay, so let's start actually looking at these breaks right here. So we know this is an 886 retracement. Okay, let's erase that. All right, let me erase it. Now it's an 886. Start actually looking at the market flow. Okay, from this high to this low. Boom, 50% retracement. Okay, so let's figure out where would be if we're let's actually go back like this so you can't see what's going on. Okay, if I'm seeing that my trend line is about to break, I'm already measuring from this retracement. I mean, obviously, right, high to low, relative high to relative low. I'm going to see where that retracement is coming in. It looks like it's coming in right at the 50. All right, and that's when we get that trend line break. Okay, let's project where we're going to stop. Okay, now I'm going to be showing you guys an alternate ABCD pattern. Okay, what an alternate ABCD pattern is, you have an up move, pull back, and then you get the extension, but it might not be equal to the first leg. Okay, so how do we measure that? Go by your Fibonacci, just like normal, high to low, or low to high. 50% retracement, right? Instead of doing your extension, your Fibonacci extension from the rejection, right, to get a full ABCD pattern, since this is an alternate ABCD pattern, what you're going to do is you're going to do from your initial low, try to be exact here, up to your high, and back to the initial low. Okay, so the first one we're going to look for is the 127 and the 1618, right? Those are going to be our levels that we're going to see that market. When the market's flowing, when you're actually doing these exercises, okay, these back tests on Euro Pound, you're going to see that the market flows, okay? It's beautiful. You'll see these up moves. You'll see it stop right at the 1618, pull back, make another Fibonacci confluence, and then go back to another, and then extend once again to another 127 or 1618. Okay, so we're going to be going through exactly, I'm going to be showing you exactly, okay? It's an alternate ABCD pattern. This is more about market flow, okay? This is going to help you see the market flow, okay? Especially when you're getting lower lows and all that, okay? So let's actually measure this out, okay? See, so we know we got a 50% right here. All right, I'm not looking for the same measurement move, okay? I'm not doing a full ABCD pattern, okay? I'm doing an alternate. So I'm going to do my extension from this high to this low, back to the origin. Okay? Proper extensions here. Back to the origin. Boom. 1618. Where did we stall out the 1618? See it? A, B, C, D. Retracement. Now, we know that's a 50%. Okay. I'm going to start leaving them there, and I'm going to start showing you why when we're doing our markup, okay? Hopefully it's not too slow or too boring for you guys, because, I mean, it's fire. You know, it's just boring stuff to me because I already know it, but hopefully you guys learn something. Hopefully I make it interesting. Okay, so we have a 1618, right? Boom. We have a down move, retracement, 50%. We just measure it. We don't care really where the, obviously the more shallow retracements are going to go further, but all we're measuring is the overall move, right, with the extension. So from the high to the low, back to the origin, okay? We don't care about this retracement. We're going to see where we're going to stall out, okay, on this full extension of that full move, okay? So we stalled out at the 1618. Okay, so now what we're going to do, take our Fibonacci once again. From this high, remember our 50% is going to be our new high. High to low. All right, right now I'll fix the Fibonacci, don't worry. I know it's going to be a 786, I think. Looks like it. Yeah. Right at the 786. See it? So I know I erase my 50. Boom. 786 retracement. Okay, we get our 786 and it looks like we rejected off of it. If we're going to be selling, where are we going to be targeting? Another extension. Pull out our Fibonacci extension tool from this high to this low, right? Our new move to the downside, and then we get the retracement at the 786. So let's measure that out. I have to add in the 127. Also the 1414 is good, but I like to use the 127 and 1618. Okay, but I'll add in the 1414 and see if we can get something in there. Okay, so let's see. Boom. Okay, we got a deep retracement right here. I see this pullback right here. So let's see actually where we came in at. Let me see. Boom. Okay, we have a 127 in here, bounce. And then we get a down move again. Let me see. 1 second. I want to make sure it's exactly like my old markup. Okay, we got the 786. Yeah. Okay, so this is we're gonna have to measure this one. Okay, so we got the 127 right here. So let's put our arrow right here. 786 came down to the 127. Beautiful. That's a beautiful alternate ABCD pattern. Okay, that's beautiful. 786, 127. Boom. That's. I mean, I love those ratios. Okay, so then we get a retracement. Back up. Also notice it broke this previous high. Just haired it. Just pick up those stop losses, right? People put them right on it, so that's why. And then boom, we get a drop off again. Okay, so this is a 127. erase the 1414, the 1618. Okay, we know to 127, we get the retracement. Now, once again, Fibonacci. From the 786, remember our new move to the downside. Let's measure it out to see where this retracement comes in. High to low. Remember at the 127, that's where we stalled out. Let me fix the Fibonacci because we're cleaning up the charts, right? We only want to see what we want to see. And what do we get? A nice 618 retracement. Beautiful. Okay. Once again, now that we have our 618 retracement, right, and we got that rejection candle off of it, where are we projecting the market's going to be? Try to get a try to at least get a 127. Once again, pull out the Fibonacci Extension tool. Yeah, you see we're getting right at the 127. It's beautiful. And what do we get? Once again, a retracement right at the 127. And then you start measuring it out. Once again, guys, I mean, it's that easy. Like, it's literally that easy that you're just following the market step by step, okay? You're seeing what's going on. You're making lower lows, lower highs, right? So let me actually start labeling that out before I start measuring this one, okay? I know this is going to be, should be a 786, a little bit more than a 618. So yeah, it's going to be a 786. I'll just eyeball it. Yeah. So let me just fix it up right here real quick because we had a deep retracement right here. I'm trying to match it to my old markup so I can show you what I was seeing. And then we finally get a retest of the low. That's where our double bottoms come in, right? And the retest was obviously to the 127. And then we get that retracement. And then right now we'll measure that retracement. Okay, so let me actually start labeling these. All right, we have our peak high. Well, it's actually, this is the peak high. This is our 86 retracement. It's because I'm trying to take you step by step, basically, because I mean, the markup, I can do it in a few minutes, but I'm trying to explain it to you guys, you know what I mean? Okay, so peak high. This is the peak high. And that's when we started, the downtrend, okay? Lower high. Let's make that a red because we're in a downtrend, right? 886 retracement of that move. We got a break of the trend line. Now we're looking, remember, this is all predicated on the break of the trend line. Now we're going into a downtrend, okay? That's why we're looking for these retracements at those levels, remember. The best retracement, 618, 786, right, for sure. And for our extensions, 1618, 127, right? Very, very simple. Okay, so let's actually start. Okay. Lower high, lower high, lower high. The lower high got broken, but it's still a lower high relative to that high. Okay, that's how we know we're going into a downtrend. And then we just do lower low, lower low. Make these a little bit bigger. Lower low, lower low, lower low right here. And made another lower low, and made another lower low. It just keeps going, right? Downtrend, heavy downtrend. Okay, so let's see where we're at. Okay, we're measuring from this lower high to this 127, right? From this down move, we're double bottomed, so we're going to see where that retracement comes in, and then we're going to see what we see there, right? So let's measure it from this high to that low, right? Our full double bottom low where the 127 came in. Pull out the 786. Boom. 786. When you get a double bottom like this and you're in a downtrend, that's your alarm. The alarm should be going off in your head. What's going on? Okay, this is actually a harmonic pattern. It's a bearish Gartley. Basically because we have a 618 retracement right here, and then we get the final tap here to the 786, and then we keep downtrending. Okay, so once again, this is an example of basically what I'm seeing, guys. This is what I mean by my charts are artwork, because basically as I run through them, see a lot of goodies. Okay. That Gartley coming in right at the 786. The B point was at the 618, and then we got the double bottom type structures that I always tell you guys about. Remember, harmonic patterns, they're not complicated. It's just Fibonacci's. Okay, it's just the next level of Fibonacci's. Just look for double top type structures and double bottom type structures, and then measure out with your Fibonacci's and match them up. Okay, so we'll go more into harmonics in other videos, but later in this video I'll go way deeper into harmonics. But right now we're just looking at the trend. Okay, so we have the 786. Where do we? Okay, now that we have the, let's say we had our confluences of bearish Gartley, and then we had a 786 retracement on the downtrend. Remember, lower highs. Let's measure out where we predict the market's going to go to. Okay. Once again, Fibonacci extension from that high to this low, back up to the origin. Alternate ABC, right? We're expecting at least a 127, right, for this downtrend. Probably gonna go way further, but okay. So we got a break, we got a retracement right here. Let's see. Oh, okay, yeah. I believe it was right here. So we have a 127. We have a small retracement right here. I think it was like a super shallow retracement. I mean, from this, okay, remember, from this high 76 to this low right here, I think it was a 23.6 retracement. Let's see. Yeah, I mean, that's how shallow that retracement was. But right now I'll draw on the arrows for that, so I can show you so you guys are not confused. But watch, we're just breaking down market structure. Okay, so we got a break of the low. Where do we expect it to hit? At least the 127, which it did. Okay, we get the retracement, super shallow retracement, so we know that the extension for sure is going to be hella far. All right, for sure. All right, so we're probably going to be a 1618. Okay, so let's actually measure from this move to this move. Let's measure the extension of that. Remember, we're just walking through the market, walking it forward pretty much. So extension, high to low. Remember, we're on the downtrend. Back up to the origin. I gotta be exact with these because I'm a scientist. 1618. I'm gonna enable it because I don't have it on there. Okay, boom. We get the 1618 retracement. See it? Boom. That's beautiful. Okay, let me erase the 127. So we know. You see, when it was a really shallow retracement, you get those big extension patterns, right? Boom. When you have those really shallow retracements, that's when you're expecting a little bit more, right? The extension, a little bit past probably 127, 1618, next target. Boom, we get the retracement. Let's measure it out. Once again, let's see what happens here. Oh yeah, I think we're probably, look, we've been trending hard, so we're probably gonna get some consolidation, but let's see what happens. Yep, there's a consolidation. Boom, break again. Okay. And we actually make a symmetrical triangle right here, so that's coming into market formations. And we get a harmonic right here, but I'll go into that right now. And break low. Wow. Right now I'll draw that arrow. Let's actually draw this symmetrical triangle right here. I want to scroll too forward because then, but I have to for this symmetrical triangle. Yeah, that's exactly how I did it. Boom. Okay, so let's see how I told you guys I'm going to be going over everything. This is a symmetrical triangle. What do we expect on a downtrend for a symmetrical triangle? A break to the downside, obviously, right? So a break to the downside, a retest. All right, so let's actually see where that retest came in. Start blowing you guys' minds, all right? So boom, we get a break of the triangle, symmetrical. We get a retracement. Very, very shallow retracement. Where do you guys think it's going to come in? I know it's going to come in 38.2. Fix up the. I mean, I can kind of eyeball the Fibonacci there, you guys. 38.2. All right. So once again, what do we expect? If we start doing our Fibonacci extensions. What do we expect, guys? 127, 1618, right? Probably past that. We're going to go heavy into a downtrend now. I feel it. It's about to do some kind of crazy extension, I think. Let's see. So check this out. This is actually beautiful. 1618 extension. Look what happened here. We got a consolidation. We got a bounce back up. And then we finally got the continuation, right? So let me actually look at my markup. See, so it just started going into a downtrend. Yeah, and then we actually got the full extension. Let me see. Okay. All right, beautiful. Okay, so we get the bounce right here. Check this out. You get the 1618 bounce. So let's actually measure that from this high to this low. Let's measure that with the Fibonacci. Remember, I'm walking you guys through full steps. All right, 382, beautiful. Let's do another Fibonacci extension from there, from that high to this low, back up to the high. See, I don't even have to enable the other extensions. Check it out, 1618. Another retracement. So let's actually draw out the arrows once again. This is how you guys are going to start recognizing market structure, market breaks, extensions. All right, this is a alternate ABCD pattern. I'm running you through. The reason I'm using it, guys, is because for market flow, it's the best pattern pretty much. Like for smooth market flow like that, like market trending, these 1618s, 127s, that's where the market usually pulls back, and then you can start measuring for the retracement, get back into the market, you know what I mean? It's very simple. So let's measure this one out now. This high to this low. It's probably going to be a, let's see, 50, 618. Yeah, 618. So that's a 618 right here. This retracement's a 618, right, of this move, high to low, retracement 618. So let's actually get our extension. Once again, high, extension, Fibonacci extension, high to low. We're on a downtrend, guys, remember. Back up. And what do we see? That we get past the 618. All right, but let's see. Okay, now that we got an extension way past the 1618, we know that the trend's probably going to be dying already, guys. Okay, does that make sense? We've been on a downtrend for so long. Okay, so let me actually enable it. Yeah, so we actually got a 224 extension. Okay, this is way over. This is like, the market's pretty much exhausted already, okay? So we are going to see a pullback, and I'll get into why right now with all the confluences. Let me erase the 1618 on this one. I'm just showing you basically what's going on, basically the exact, trying to keep the charts clean here, guys, okay? So let's get the arrow right here. Get my arrow 2 out. Hopefully this is making sense to you guys. If it's not, just go back over the video and I swear you're going to see this, okay? Go on this chart, go on Euro Pound Daily, August 2013, all right? And start running through the chart just like how I'm doing it and see if you can see what I'm seeing, okay? All right, so we got that 224 extension. The market's exhausted for sure. Let's actually run through what we've done so far. Okay, so we started off in an uptrend. Our trend line broke, so all we're looking for is a downtrend to start. All we're looking for is lower lows, lower highs to look for. Our entries are going to be at those lower highs, okay, guys? That's why I'm using those Fibonacci's. That's what I'm looking for, 786, 618. That's what I'm looking for to get back in the market. All right, 382 sometimes. All right, but I usually like to wait for deeper retracements. Okay, so we got the break of the trend line. That's how we start the downtrend. And check it out. Down move, retracement 50%, extension 1618. retracement 786, extension 127, pull back up into a 618, zoom in, down move, pull back to a 618. Where do we expect the extension to go? At least a 127. Extension hit 127, right here, that red line. What do we expect? Pullback. Where do we expect it to pull back to? If it double bottomed, a 786 minimum. Alright, if it's going to do a double bottom harmonic structure, harmonic pattern, 786, right? Most likely. Bearish Gartley is very accurate. We have a retracement at the 618 at the B point. That's how I know it's going to be a harmonic pattern, right? When it does a double bottom and the retracement in the middle is 618, possible you can make it a harmonic pattern, right? Very simple. So we get the Gartley, 786, bounce, boom. Now we're projecting 127, right? Minimum for the extension of this low. Got it? Break of the low, 127 hit. Get a retracement, very, very shallow retracement, 23.6. Right here, boom. We get a very, very strong, we're in a strong downtrend, right? This is off that Gartley pattern. We're in a strong, heavy downtrend. We broke the trend line on the daily chart. We're going down, guys. We're going down. All right, so now we have a very shallow retracement. Where do we expect the extension to go all the way to? 1618. Boom, 1618 hit. Extension. Boom, we get the retracement. Get the pullback. We get the retest. Retest of the high, broke the high, wicked it only, came back down. It was a trap move, stop hunt. Alright. So let me actually put a little trend line right here so you can see. You're going to see this on downtrends a lot. Before the real move, they'll just stop hunt real quick. They'll just spike the high, close back the low. Still in a downtrend. Lower highs intact, lower highs intact. Market still trending downwards, boom. And then we start getting those symmetrical triangle, right? Those swings that we all get trapped in, right? At the worst times. This is how you get. This is how you avoid them. You know you're in a downtrend. If you start seeing this symmetrical triangle print, you're just gonna wait for a break. Stay out of the market until it breaks. Boom, we got a break. Let's wait for the retracement, the retest of the outside of the triangle. 382. Boom. 382 hit. Where do we expect the market to go? At least a 127, 1618, right? Extension. Where do we hit? 1618, right here. We get the retracement, 382. Where do we expect it to hit? If it's shallow retracement, at least a 1618, right? If it's very shallow, most likely 1618, hits it. We get the retracement, measure it out again, 618, bounced, continues. And boom. Finally, over-exhausted the trend. We've been on a downtrend forever. We already broke down from a symmetrical triangle. We're exhausted. Look at this trend's exhausted already. How do I know it's exhausted? Look at this extension, 224. All right, the retracements are shallow, super shallow, super shallow, super shallow, and then finally get the deep, deep extension. So now I'm going to start looking to go the other way. All right. Hope that's making sense, guys. I hope that makes sense. Like, this is market structure. If you're not understanding it, draw the arrows like I'm showing you. All right, just go on TradingView, use the arrow tool. All right, I hope this is making sense, guys. Please, if it's not, watch it over again. This is basically just market structure, okay? Okay, so let's go back. So now I can show you. Now I can show you a real lesson. Everything we've been looking at has all been a part of a harmonic pattern. All right, so let's actually see it. All right, you ready for it? All right. Okay, so we know our uptrend started right here, right at the 775, right, quarter point, August 2013, right here on the daily chart, right. This was the start of our uptrend. The break of the trend line is when we started our downtrend, right? So let's actually measure with our Fibonacci from this low up to that peak high. All right, I want to see where that retracement comes in right here. All right, for that double top. All right, before we started this crazy downtrend, okay, I want to see what retracement that is. Okay, so Fibonacci low up to the high. Let me add in my 382 because I know it's going to be 382. Yep, 382. We get the retracement off 382, right? The market's just exhausted because, I mean, look, it made a huge uptrend, retraced deep, tried to go all the way up, back up there, didn't have enough power, stopped right at the 886, and then we started that downtrend, right? When we broke that trend line, we know we're going into a downtrend. We're just looking for lower highs, lower lows. All right, we're just looking for those Fibonacci's to get hit. We're going to take setups off those Fibonacci's, all right? Very simple. Hope it makes sense. Okay, so now that we know this is a 380 retracement of this huge up move, pull back. Let's draw the arrow so I don't confuse you guys with my words. I know I talk really fast sometimes, but just trying to get these ideas across to you, how I see the market. So we have a big up move. We have a retracement 382. We have a double top. What did I say about double tops, guys? It's usually setting up a harmonic pattern most of the time. Okay. The market moves in harmonics. The market moves in Fibonacci's. Okay. Everything's a flow. It's an ebb and a flow. The reason I can mark it up like this is just I'm going with the flow. All right. That's why my Fibonacci's line up perfectly. Like the numbers are all lining up because I'm flowing. I'm flowing with the market. Okay. So we have once again, double top. So let's see what type of harmonic pattern we actually can have. Okay. So we have a shallow retracement 382. I know if this low point breaks, I'm going to get an extension pattern, right? An extension harmonic. Okay, so let's actually start breaking it down. For a harmonic pattern, let me actually draw it out for you guys, and then I'll actually, well, it's because I want to show you how you would be seeing it in real time. So let me actually try not to move too much forward. Okay, boom. Okay, as soon as we break that low, I'm going to start measuring with my Fibonacci. Okay, see, boom. See how we broke that low right here? And I know it could be making harmonic type pattern. I'm going to start measuring it out. Okay, so I'll actually label it first so I can show you how harmonic works. X is my X point. Whoops. X point. XA, B, and then C point, remember the 886 that we started off with. And then what are we looking for? A D extension beyond this X point, okay? And that's what we're going to start looking for, our patterns, okay? Once this X point breaks, I know for sure we're going to make an extension pattern. And then I just line it up and I snipe them, all right? And this is a daily chart, guys, so you have a lot of time to, a lot of time to analyze. You just got to look at the bigger picture. I don't know, maybe you just got to study, guys, basically, and you'll start seeing them. Okay, so once we get the extension, we got this break of this X, we're going to start looking for the extension. All right, so I'm going to pull out my Fibonacci extension tool, AXA, remember? ABA and AXA. A, X, A, back up to A, and let me actually start labeling them. 1, 2, 7. Okay, so these are going to be, I think it's going to be a 3, 6, no, it's going to be a 224. Let me look at my markup. See, I don't want to go too forward. I think it was a butterfly pattern, so yeah, it was going to be a 1618. So let me actually look at my extensions, 1618. No, it's going to be a crab. What am I saying, butterfly? It's going to be a crab, guys. I'm sorry. Thought it was going to be a butterfly, but no, that's something else. Okay, so we have the 1618 right here. Check this out. Hopefully this chart's not too crazy. You see this 1618? That's the bottom of the crab pattern, okay? See, so that's the AXA. Okay, this is the AXA. Now let me do the ABA, which we're going to expect for a crab pattern. Either a 224 or a 3618. Because of this drop, guys, how deep do you think it's going to go, the extension? It's going to go to 3618 for sure. So A, extension a Fibonacci extension, A, B, up to A again. way past our 224. So look, we're gonna have to add in the 3618. Boom. Got it. So let me erase the other ones. Boom, boom. 1618. Let me erase these, the 127, the ones we don't need. All right, only the 1618. Okay, so you see this 3618 and this 1618? That's going to be our PRZ zone for the harmonic. Okay? These huge harmonics, guys, draw it out for you guys. Sometimes they're going to have these big PRZ zones, okay, especially on these higher time frames. They're going to be a very large zone that you're going to look for a reversal, but you're going to see that it paid out big if you're patient for it. Check this out. 886, and then we get the extension. And then now you see the pattern, guys? See it? Let me go to the weekly chart. Whoa, whoa, whoa. Did not switch to the weekly chart. Let me go to the weekly chart, guys. Check this out. Wrong markup. There you go. See it? Is it the weekly chart? No, it's not. Yeah, it is. Okay, that's the weekly chart. Check out that zone, guys. How beautiful that is. You got that nice head and shoulders. Going back into structure, market formations, right? We're going to be getting more into that in another video. Check this out. You got that triple bottom. And what happens, guys? I think we reach all-time highs. Yeah, that's where we're at right now. All right, so look at that. Look at that. This is a weekly chart, guys. Weekly. All right, when you saw that triple bottom form, your entry would have been anywhere in here or when it breaks out of the zone. Right here when it's peeking out of that zone, you can just put a buy in. Just, I mean, these stop losses are going to be huge, but on intraday charts, you can be scouting it out on the daily chart, especially on the daily chart. But just check that out, guys. Okay, look, everything we went through was all part of a bigger picture. Like, it was all part of the bigger picture. And then check it out, triple bottomed, and then we take off. All right, it looks like we're probably going to get a retracement here. We got a big takeoff, and then look, we're making lower highs, also making higher lows. So we're actually in a triangle type pattern, right? Symmetrical triangle type pattern. This is a weekly chart. So we're going to see, we're going to break. See how we're just chilling? It looks like we're going to break to the downside, probably a retracement. And then, of course, we'll look for structure. We'll start doing our Fibonacci's and all that here. But what I wanted to show you guys is step-by-step everything. So those are harmonics, basically. It's just step-by-step harmonics. Remember, lower highs, lower lows. Remember, it keeps breaking the low. You're going to keep looking for extensions, okay? Makes a symmetrical triangle. If you're in a downtrend, you expect it to break down. If it makes a symmetrical triangle and you're in an uptrend, you expect it to break up. Okay? And sometimes you won't see symmetrical triangles. You'll see the descending triangles, right? Or it flattens out at the bottom and then it's making lower highs. So you get different patterns, guys, but this is basically it. Have your overall bias. All right. So if you would have spotted this harmonic pattern, your bias would have been short for weeks, for months actually, until you hit this zone, and then your bias should be changing. You should be saying, I'm going to wait for it to bottom out, and then I'm going to look to go the other way, and it did. All right. Let's go back to the daily chart. See, this is current price action. Look for entries here. Entry right here when it broke out of the zone. Okay, after it triple bottomed, head and shoulders inverted, and it broke out right here. Right here, remember 3 hits to the low. Usually for this pattern, right, it did 3 hits to the low. So when it broke out on the 3rd hit, you're gonna look for your entry on the retracement. So it broke out right here. Wait for the pullback. Then you can start getting in. Boom, boom. So look for entries, all right. And then you can swing this. It's a big pattern, guys, so you could have swung it all the way up to here. And you would have had your quarter points for targets as well. I'm not going to add them in this video. That's for the next video, guys. hopefully you learned something. Once again, alternate ABCD pattern. Let me show you how to actually measure it out. See low to high. Where you expect the extension to go to, right? For an alternate ABCD pattern for when you're flowing with the market. Extension. A 1618 or a 127. Alright, put that in there. Boom. A 127 or a 1618, right? You also have the 1414 in there. But they don't occur as often as the 127 and the 1618. Alright, very simple. They're not the exact same distance either, guys. Okay, so this is not the ABCD pattern where you can copy this up move and then, you know, copy it and then it'll be the same as this up move. No, they're alternate links. Okay, that's why they're like that. Okay, that's why we're using the extension of the overall move. All right, and not off the actual rejection point. All right, for the exact same. Like, look, watch, a 382 retracement. I know it's going to be if you're using your Fibonacci extension for ABCD pattern. If they're equal, it's a different extension, okay? So, hope you guys learned something from this video. In this next video I'm going to be going into the harmonic patterns right here before we get the takeoff. I would suggest going to my harmonic course first, going through that, and then you'll be able to understand what I'm doing here. I mean, you can watch it anyways, but now you know. Market structure, lower lows, lower highs, harmonic patterns, Fibonacci. You know about Fibonacci now. I hope you guys know about Fibonacci now. You guys should already pretty much be masters at it. Just go back to this chart and mark it up exactly how I'm doing, and go back over this video. Yeah, I mean, I hope you guys you'll be spotting those setup as well. Once again, this works with any pair, any time frame, right? Stick to the higher time frames, guys. If you're going to be doing your analysis daily in H4, all right? At least, come on. You know, I see people doing crazy analysis on 5-minute charts, 15-minute charts, and I'm like, dude, I'm looking for overall moves, guys. I'm looking for big swings, all right? So if I knew, all right, so this harmonic pattern, it would have put you in an uptrend for a while, all right? And then we'll talk about take profit targets off the harmonic patterns and all that. But just showing you market flow. This is like what I do. I could add more, right? I had quarter points in, and we'll have even more confluences for these trades. For entries and exits, once again, you're looking for trend continuation. So if you're in okay, so first thing you do is you pick your bias. You wait for a retracement against your bias, right? Like if you're in a downtrend, you're going to wait for a pullback. If you're in an uptrend, you're going to wait for a pullback. You let it hit one of your Fibonacci numbers, and then you see a rejection, and then you take it off that, all right? And then you put your Fibonacci extension and aim for that 127, 1618, at least minimum target, okay? If you're going to get a break of structure, continuation, trend continuation, of course, right? When you do get that trend continuation, most likely at the 127 or the 1618, you're going to get that pullback, and then you can measure out again, get back in the trend. All right, it's very, very simple, guys. I don't know how more simple I can get it. It takes a lot of practice, okay? It's easier said than done. But yeah, once you start understanding and recognizing these structures, these Fibonacci ratios and all that, you'll be able to better understand why the market's retracing, why the market stalled out right here, why is it dropping, you know, what's going on, why is it breaking the low? Well, we're on a downtrend, bro. Look at the 618 retracement it just hit. That's why it's breaking down, you know. And then when you get those double bottoms, you're most likely going to start getting, you know, harmonic structures, double tops, you'll start getting harmonic structures. So that's in an uptrend, you'll get those double top type structures, and then it'll continue the uptrend. All right, once it's done with the pullback. All right, so they're just complex pullbacks. But yeah, guys, hope you learned something. I tried to keep the charts as clean as possible. My chart's like a mess right now. Like, you can't even see what's going on. There's so much numbers everywhere. But I'm going to clean it up. So yeah, on to the next video, guys. I'm going to be going over this little area, a little bit more. When we get these back and forth, basically when the market's consolidating like this, when just ranging, most of the time you're just getting harmonic pattern formations, right? So it's a little bit more advanced stuff, but we'll get into it. So on to the next. Peace.